Hello, Warriors. Looking forward to having a good week. I'm going to do my best to give you my narratives on different markets. I never put a gun to anyone's head. Always check your own work. Don't just take mine or anyone's ideas blindly, or you won't learn a thing. You have to understand the whys of what is a contingency that has me assuming risk and is compelling enough to do so. Where am I wrong? And when I'm right, not if I'm right, when I'm right, what am I looking for? It gives you your risk reward, profit risk ratio on the trade. So I'm going to take it back. Let's do a little rerun from last week. So last week when we came in, we had that consumer confidence report and people got all buried up in the dollar. It was my contention that this double top was not going to hold and that I was looking for it to be taken out before there would be better shorting opportunities or dollar selling opportunities in the market. So that did happen on Friday. This was Thursday. This was Friday. So we cleaned out all the bears, buy stops elected, and we headed up here. And this is where I was talking about 93.50. So the high was actually 22 points higher, 93.72 before we got a reversal. And what's important about what's happening today is if this was such a significant breakout in the dollar for higher levels, what are we doing underneath it? So, it's you never know what kind of candle you have, and this is a daily candle until the candle closes. I mean, now we could be down here and by the close be here, but closes back under the breakout, negate it. And what's interesting about this setup is if you're a long-term bear, looking for shorts in the dollar and longs in cable and euro, shorts in yen, all makes sense from at least a short-term perspective. So from both short-term and long-term, if you're long-term bear looking for, 85 in the DXY or lower, this is a great area for you. And if you're a bull in the dollar, this is a nice counter trend trade. So either way, it's saying, just go with the flow. Don't worry about tomorrow. Do the right thing today, and tomorrow takes care of itself. So you have this market. I shorted it Friday. I took some in here. Actually, my target could take us all the way back down towards this 91.40 to 90.80 area. I'm focusing kind of on 91. 91 is a big area. And if the bullish situation takes place, then we get something like this, which was, about 480 or so from here is going to give you a 95 DXY, 96 DXY. So I'm considering this just maybe an ABC for A. And now we're going to have, and I'm not an Elliotician, but I know enough to be dangerous. And then we get a pullback to correct this advance. And then we have one more advance to take it up towards a big battleground in the 95, 96 level. But, let's just exploit what's happening now, and that's a false breakdown. So I talked about the euro bottoming between 1680 and 1650 after we had that false breakout, and the lows came in on Friday at 1664. The 1750 has been a big pivot. I think we are going to get through this 1750, and this false breakout is going to have more legs than this one. I think that we have a chance even to rally possibly to 120 in the days and weeks ahead. And that, just like 95, 96, is going to be a battleground in the DXY. This is going to be your battleground in euro up here in around the 120 range. And if the bullish dollar scenario plays out from here, then we could get one more break and take it down towards a 113 level. I actually have, I should find that trend line break that I had in the euro that takes it down there. Maybe it shows up, we've never done this on any of my live streams. So anyway, it's important, besides watching this on YouTube, if you were on our platform Friday, www.tradegate.com, I post a lot of my suggestions and ideas, and the dollar short was there. And then actually, let me go to the monthly first. Okay, so I'm just curious if this trend line comes in where I think it may. That'll start from here. Okay, so here we go. So this is a major trend line here of a weekly break. It's not perfect. It doesn't have exact hits, but this is where I think is going to be a long-term buying opportunity in the dollar. Let's see if it shows up on the weekly. There's a weekly. So it's down here. Just so you're, start mentally preparing yourself for under 114, 113 to 112 area. I think is going to be maybe the last bus stop to get on the short dollar before maybe euro really blasts off. Okay, so this is going to be long-term buying opportunities. This is just one more pop before we head back down here. But what's posted, the point I'm making is, while I'm talking here for 30 minutes or so about the markets, sometimes the trigger happens outside of this. So it would make sense for you, if you like my work, to register on, it's free. Okay, so no risk. I guess you have to sacrifice your email address so you can register, but it's www.tradegatehub.com. And when you come in, if I'm going through a market and you have a question about it and you want to understand it and learn about how I come up with these ideas and what I'm looking for and how I see markets, you can learn. I know you can learn because I've taught it to people. I have mentors, I have mentees that I've taught that have listened to me do analysis and ask questions that end up, actually some of them end up outperforming me because maybe they have a better psychological fit. Maybe they have more patience. Maybe they're more selective. Maybe they're younger. Anyway, maybe they're younger. And if you don't know what I mean, see, doesn't it look like I've been around for a while? Well, you know what? I have been around for a while. In fact, my first job in the industry was as a runner on the floor of the CME, the old one that was above Union Station. And they had just started trading currencies there. Now, it may be hard to believe in the 20th century. We were now in the 21st century, which I was actually dragged into kicking and screaming. But they traded currencies on a chalkboard. Okay. I would take orders out to IMM brokers and everything was done on paper then. And they would update the bids and the offer on a chalkboard and last trades. So anyway, that's enough of me. So you kind of have an idea of what I'm going to be looking for in the currencies longer term and shorter term. The pound was real weak last week, and it gave euro pound a chance to recover. Now let's see. This was a good trade after the throwover, but right now the pound's outperforming. And in fact, the difference between cable and euro is euro made new lows, right? Cleaned out the low from here, cleaned out the low from here. But when you look at cable, it never took this low out. Okay. So now it's making up for lost ground. I don't know why during this dollar pull off, we can't see 140, 141, 138 is going to be an important area, but I can't be bearish cable. I don't know if EG is going to continue to head down or it's heading up. So I'm having a hard time with the preferred long or short. I just think you have to be long both of them or one of them. Looking at Canada, it's correcting now. This surprised me. I thought I was going to have a chance when we were doing this to buy it at 123. Never happened. So now we're in a bit of a pullback phase. I'm not sure how weak it's going to get, because I want to talk a little bit about WTI now. Okay. So when we were trading here above the breakdown, I said, you could be long with not just a stop under the breakdown, but a reverse out stop under the breakdown. So if you had say you're long from 66.50 and you had a 65.5 stop, but not, say you're long one lots, but you had a 2-lot stop that not only liquidated your long for the loss of, say, 100 pips, 150 pips, but then within a few days you had $3 made. So the reverse out was right. So last night, and you could go through our main menu, I made a trading suggestion to get long at 62.17 in the crude, looking for a retest of the breakdown. So this can be an important area in the crude right here, is whether or not it is rejected from the breakdown. As a technician, I think it will be, but I just wanted to show you that if you had used a reverse out strategy here, it worked. And then if you pay attention to some of the stuff I do and I've taught on RSI, there was pretty nice divergence down here. And so anyway, it worked and it was posted and I'm out. Okay. So commodity currencies having a decent bounce back here as well. Maybe not, well, they were very weak. I mean, was the best short around was the commodity currency, especially the Aussie getting to 71. The RSI picture isn't as good. It was diverging, but the RSI here was 22 compared to a stronger reading at the lows in the Swiss were 34. So I always go with, I'm a believer in buying relative strength, buying the leader, the relative strength of the group, and not the laggard. I look to sell the laggard. So that's my take. It's, my bias would be for a bear market rally in Aussie and Kiwi as well. Gold, I've changed my mind on. I don't have a position on here, but this is a path. I think we could get up to maybe 1830 to complete this. Maybe this is wave 5 up here, but then I'm going to try and be patient, wait for a pullback to 1740, 1750 to get long. I think that gold is bottomed. It was a very tricky way for it to bottom, and you see this kind of flush. I couldn't jump on it right away, and I just wanted to see it fill out, and it would have worked, but it wouldn't have worked in silver until today. So if you had just jumped on silver, you may have lost some money. It's been the relative weakness. I still think gold has a much stronger pattern. So I'd be looking to buy pullbacks towards 17.5 going forward in the gold. So we're on the verge of new highs in S&Ps here. So they fooled me once again. I thought we really had something going into Wednesday, especially in NASDAQ when it broke down under this 14,920 level. Looks like I took that line out, but they both held the 50-day moving average. And as you can see, what are we here? We're at new highs right now in NASDAQ. Previous high was 5180, I believe, right up here. So here we are making new all-time highs in the NASDAQ, and I actually think we're going to maybe 15,250 to 350. And let's see, the S&Ps haven't made a new high yet. And, that's a little different, but looks like it should have the ability to do it, maybe 4490, maybe a big round number, 4500, but I still think it's going to be a shorting opportunity. We had a huge move in VIX last week that it's given back. You see this kind of action here, this and this, it's erratic behavior in the market. There's no trending action in it. It's like big rips, big dips. And to me, this is kind of a sign of that the market may be trying to turn, because it's a battle. It's not just, sideways or trending. It's violent. And, I know you guys have heard me use this expression before, but markets top with violence and they bottom in silence. So I have to say that the action in S&Ps and the market has been pretty violent. This was a pretty violent sell-off that we had this week, and it's an even more or as much violent recovery. So, this is not normal market action like it was when, we were just kind of trending like this. Now we're getting, uh, sharp breaks and big rips. So, anyway, I'd be prepared. I always ask myself, would I get long? So when I look at this weekly on NASDAQ up here, I say to myself, yeah, it's probably hasn't topped yet, but is this where I want to get long? Or even on a daily, is this where I want to get long when we're at new highs and we've diverged? Here was the first divergence, but it was over 70. Here's the second divergence, but it was a shade over 70. Here's the third that I thought was going to be it. It was well under 70. And this was not a divergence. And the reason is because it didn't make a new high. But now we are making a new high, and this isn't even close to 70. So the divergence now, you don't even need to move your cursor to see if you have divergence, because it's glaring. Okay. It's also pretty glaring in the S&Ps, but this is, only really the second one. But this is pretty glaring divergence. We're at 60 here. Be careful being long. I don't know if it's all going to come down to what happens in Jackson Hole, but there are speakers all through the week. And I believe Jerome Powell gives his address on Friday. So, heads up on Friday, where, seems almost ridiculous that, words from one guy could shake it, but maybe we're going to rally into Jackson Hole. But keep an eye on those numbers: 15,350 in NASDAQ, 250 to 350, and 4490 to 4500 in the S&Ps. So invite everyone to join our community. Give us a like if this is helping you in your trading. I only have two eyes, but I'm sharing everything I see with people here for free. And we're interested in building a supportive community where people can learn and share and interact. And it's happening not just on YouTube, but at www.tradegatehub.com, where our mission is to build up and edify traders every day. So good hunting, everybody. Looks like the dollar, is a jet fuel for everything. When the dollar's under pressure, it usually means risk on. Definitely happening. In fact, the oil's back to the breakdown at 65 as I speak. So don't just count your pips, count your blessings. We'll see everyone for Turnaround Tuesday. Adios.